So what up, guys? We are back today with another trade, a successful one this time. How normal stop loss has been hit, and we used another strategy today. So we did not use the breakout strategy. We used the trend line breakout strategy. Yeah, TLBS, trend line breakout strategy, and it's simple, just like a normal breakout. Just that with our normal breakout strategy, I actually couldn't find any trades to take. But with this, there were plenty and it was easy to identify it. Okay, so here's an example. Another example is how the chart was like. I'm going to run it back a few candles so that you get an example of what I was dealing with. Okay. Okay, so here you see it's gold, by the way, gold versus dollar, and here you see it was in an uptrend and then this consolidation, but it's not that much of a consolidation. It's a downtrend. If you look at it keenly, the price may seem as if it's going sideways, but it's actually a bearish trend. Okay, and the way to identify this bias is by drawing trend lines. So here's an example of one. And just for someone who doesn't know how to draw it, it's drawn by securing a line that touches two major points in a major time frame, maybe two highs or two lows in a major time frame, two or more, and this shows you the structure in which the market is flowing, because the market is not always it's not always sharp. Like you see this uptrend right here, the market is not always like this. Throughout this, you can say it's an uptrend, but what if you go to a larger time frame and it's not this detailed? Okay, what if you go to a larger time frame and it's not this detailed? So a trend line basically helps one know the market bias, and the trend line breakout strategy is actually simple. So here is my trend line, and we draw another one on top right here to form this apex. So two trend lines opposite each other form an apex at the end, and that is guaranteed that by the time that the price reaches this apex right here, it will have broken out. Simple. And the strategy to this is simple. Use the 1 hour time frame or a bigger time frame. Most probably the most recommended one is the 1 hour time frame, but you can use bigger ones. Yeah, but not anything less than 1 hour time frame to execute or to plan out this strategy with. So the plan is simple. I wanted the price to break out of one of these candlesticks, and it was looking very bullish, because on this trend line you can see it's an uptrend, but this section right here from here to here is sort of a downtrend, but the price can seem to be moving sideways, so you don't really know where the price is going to break out from. Okay, but in this case, the moment I saw this engulfing candle, I knew that it was going to break out on the upper side. Okay, and so I would have waited for the price to break out right here, had placed my long position right here, placed my stop loss right here at the base of this sort of consolidation, or right here if you are more aggressive, and hope for a ratio of 2 or 3. Now, the one thing that I like about this trend line breakout strategy is that it's explosive. It may not happen right now, it may not happen, within 1 day or 2 days. Not every day is a trading day, but the one time it happens, it's explosive. Okay, really explosive, and if you capitalize on that explosive move, where the market has a lot of vim, has a lot of support to continue pushing, then you can win really big. Okay, so I was hoping for it to close above that, and what it did, it formed this reversal pattern. It formed this reversal candlesticks right here, and I knew from that moment right on it won't be a bullish trade. So if we continue playing this out, you can see what happened right here. You can see what exactly happened. So the price ended up forming an evening star right here, which is a major reversal candlestick, and from the next candle, it engulfed the evening star plus all the others behind it, ending up closing behind or below the trend line right here. Okay, and that was our signal that it's going bearish and we need to enter the trade. So I ended up entering right here, placed my stop loss right above the trend line, and the market did its thing. Okay, so the price had already reached here before, here where this week is. The price had already reached here, and then it ended up closing right around here. So I knew for a fact that it's going to go below this wick right here, which is a good risk to reward ratio. Okay, and I ended up getting like $100 in profit. Okay, it was at 170 something, now it's 277, and we're glad we're not back in the 100s anymore. Okay, now we are aiming for the 300s and above. So you can see right here, bam, 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 bam. So that's how it played out. That's how we ended up with today's profit, and that's how today's trade went. Now, I know you might be wondering, if you knew it's going to explode downwards, why didn't you place your take profit way lower? And it's because for me, I always aim a risk reward ratio of 2 and or 2.5, but I know with this strategy that it has explosive trades, so I'm okay with risk reward ratio of 3. Okay, 3.5, I'm okay with that. But if you're aiming to trade with this strategy, the price almost retraces back to the previous major, how shall I say, the previous major swing low or swing high, depending on the trend in which you are trading with. Okay, and that's the strategy. I look forward to backtesting it a lot and see its accuracy. If it's better than the London breakout strategy, we'll just keep on using this one. Yeah, because it has worked out to train. And another thing that might also come in question is, what if it's a false breakout? What do? You can't really do much. It's either you take your stop loss to break even or in the profit zone, and the price takes you out with a small profit. And then if it's a retracement, it will have formed a support, so it will look something more of like, let me delete this. So it will look something like this, and then reaches somewhere a point like that, reaches a point like that, and then the market finds support. So the market finds the support right around here, and this area that it has found support should be your entry zone once it, traces back to that point. So here you will have made some small profit. If it took you out, you still have a chance to go back in once the price crosses this support level right here that has just been formed right here, and then it continues on an explosive move downwards or upwards depending on your trade. Okay, and this actually, if the price didn't stop you out, this actually can be a good chance to add on more trades. Okay, add on more, the profits get bigger, your account grows way larger. Okay, now if I backtest this strategy and it works out more profitable than the previous one, obviously I'll use it, and if it's that profitable, we'll be doing add-on trades. Yeah, that's what I'm planning on, and it's quite simple. No defining your chart, nothing like that. Like, it's just plain simple and straightforward. I like it. Yeah, so I will continue with this. See you guys on the next video. This is day 9, eh? Yeah, day 9. See you guys on the next video. Peace.